Hello everyone, thank you for viewing these week videos. Let's look at the indices and check out how they performed, also the outlook for next week. The US market continues its recovery riding on the good results from the technology stocks. The market sees a return of growth for the technology stocks, especially when Google and AMD recorded blockbuster results, close a tad higher than the week earlier. The less than satisfactory recovery was marked by Facebook, aka Meta, as it plunged 26% after missing the market's expectation in its recent result, dragged the US market lower during the midweek, and only bullish strength returns after Amazon's result. Now, let's take a look at how the individual indices performed and what's the potential movement for next week. Let's start off with the Dow. Now, you are looking at the chart on the screen right now. Okay, so let's turn off the indicators and look at how the chart moved. Now, last week, we anticipate the breakout from this 34809.41 level. And we want the Dow to hit at this level around 35,686, and the Dow did. So it pulled back and retest these supports at 34809. And this is a good sign as this put itself in a good position to continue to move higher, especially if it can hit back this level at 35686 and break up from there. That will form higher low over here and higher high over here. Now, the upward movement will be more convincing if the index can move to test its high at 36926. Okay, so let's see whether the uptrend can form next week with a higher high and higher low. Next, let's take a look at S&P 500. The S&P 500 has broken the 4493 recent level, which we anticipated last week. We mentioned that, I mentioned that this reason needs to be broken, and the S&P 500 has to hit somewhere around this level at 4596 in order to start off a new trend, and it has done so. So it has pulled back to retest this 4493 as support and managed to close above it. And we need it to rebound next week to retest this 4596 resistance and break out from there to form higher low and higher high, and retest of 4747 resistance to continue its uptrend. So if the S&P 500 can continue to do so, then we probably will see a higher closing in February, and then the upward movement may continue towards March and April. As I mentioned last week, we expected a recovery from the US market in February. Now, let's take a look at NASDAQ. So NASDAQ's recovery was put a pause by Facebook as the result wasn't that satisfactory, and it closed below the level that we wanted it to close above. So it closed below 14192, forming a minor resistance at 14497. Now, the market will be looking at the next week's key data, especially which is important for NASDAQ, is the core CPI number, because a lower number can certainly help NASDAQ to move higher. Now, as anticipated last week, NASDAQ would not likely to have a smooth V-shaped recovery as Meta has dragged the market lower, and Amazon and Snapchat helped the market to close at a decent level, especially it managed to hold at this 14007 support. Okay, so this was a previous recent now turn as support, and next week, if the NASDAQ continue to move higher, expecting the market is expecting probably a good data from the import-export trade balance, and hopefully a lower CPI core CPI number, then Nasdaq breakout above from this 14497 resistance would help it to form an uptrend. And the next key resistance to look out for will be around 14932. And if we hit this level, we have a higher high and higher low form. And certainly towards March, we have a chance to go back towards 15903 level. So let's see whether it will take place throughout the rest of the month. Next, let's look at the Asian market. Let's start off with STI. The Chinese New Year rally took place last week as the STI rocket passed its minor resistance over here at 3272 and blasted past its resistance at 3298 to close higher. So the good closing has put the index in a very good position to continue higher towards its next key resistance at 3385. So certainly we hope that next week it can move higher to test this resistance. So with no apparent weakness, we shall see and watch how the STI perform going forward to have more analysis. Move on to Hang Seng. Fortunately, the support level at 23627 managed to hold nicely as the index opened last week above this support level and managed to form a bullish harami at the end of the closing. So this pattern has helped the index to move up higher as it kept the end of the first week of Chinese New Year with a strong opening, and it forms an island reversal. So what's an island reversal is that we can see this as an island. This recovery took place. So there are gaps in between. So this is what we call the island reversal. And the strong closing has also filled up the gap over here. So this is a very strong bullish movement, and we see chances for the index to retest 25000 level. And if it can do so, it can avoid the downtrend, and we see there's a chance for it to do so, to test this resistance level. Alibaba is set to announce result on the 7th of Feb, and a good result may lift the China tech and certainly the index. The Chinese New Year officially ends on the 15th of Feb, and let's hope that the rally continues. By then, we may be able to see Hang Seng retest this resistance at 25753. Now, overall, a good week for the global market, though the US market recorded marginal gain. It remains on track to move higher, but it needs to rebound to retest its resistance level. The Asian market has continued to outperform the US market, but there are still challenges ahead, especially the Singapore banks are announcing results soon on the 14-week Feb week, and need to watch whether is there any sell on news action. Nevertheless, it's still early to say as we still have another week before the result. Thus, let's continue to ride on this bullish momentum to the resistance. Now, thank you for viewing this video. Now, if you have any questions, you can feel free to leave your comment in the YouTube, and I'll be happy to answer it. If you like this video, do smash the like button. Okay, so see you next week.